What if I told you the real SpaceX IPO trade may not be SpaceX itself? Stay with me. SpaceX is the obvious name everyone wants to buy. It has rockets, Starlink, reusable launch systems, and massive private market attention. But most retail investors may never get access to the best SpaceX allocation. They may not be able to buy private shares. They may not get favorable IPO pricing. And if SpaceX eventually opens for regular trading, the first clean entry may already be gone. So the real question is not just, how do I buy SpaceX? The real question is, what do investors buy if they cannot buy SpaceX? If you want to track these SpaceX proxy plays before the IPO story becomes the only thing retail is chasing, subscribe to Stock Breakout, hit the like button, and drop the one ticker you think could benefit the most if the SpaceX story heats up. DXYZ, Tesla, or Google. Because the obvious trade may be private. The proxy trade is public. Some market speculation has pointed to a possible SpaceX listing window in 2026. Some market expectations have also floated extremely high valuation scenarios for SpaceX or Starlink. None of that should be treated as confirmed unless the company officially confirms it. But even the possibility is enough to create a major public market question. If SpaceX moves closer to an IPO, the market may not only focus on SpaceX itself. Investors may start looking for anything already connected to SpaceX, Elon Musk, Starlink, private company exposure, or the broader valuation reset around commercial space. This is how second-order trades are born. When investors cannot buy the obvious trade directly, they often search for the closest public market substitute. If SpaceX becomes one of the biggest IPO stories in the market, that same playbook may happen again. That is why today we are ranking 3 public market SpaceX proxy ideas. Destiny Tech 100, ticker DXYZ, Tesla, ticker Tesla, and Alphabet, ticker Google. These are not the same trade. DXYZ is the direct exposure proxy. Tesla is the Elon Musk sentiment proxy. Google is the large cap holder proxy. Let's start with DXYZ. Destiny Tech 100, ticker DXYZ, may be one of the closest public market investors have to a direct SpaceX proxy. DXYZ is a closed-end fund focused on top private technology companies. Its portfolio is designed to give public market investors access to private unicorns that ordinary investors usually cannot buy directly. That matters because SpaceX is still private. For most retail investors, buying SpaceX private shares is not simple. It can involve eligibility limits, secondary market restrictions, high minimums, limited liquidity, and pricing that may not be attractive by the time access becomes available. DXYZ changes the conversation because it trades publicly. Investors can buy and sell it through the market, and SpaceX is one of the names investors watch inside that portfolio. That is why DXYZ may become a major retail watchlist ticker if SpaceX IPO speculation gets louder. It gives investors a simple narrative. If SpaceX is worth more, then a vehicle holding SpaceX exposure may deserve more attention. But here is where investors need to be careful. DXYZ is not the same thing as owning SpaceX directly. You're not buying a clean share of SpaceX. You are buying a fund with a portfolio, a structure, expenses, liquidity dynamics, and market pricing that can move far away from the estimated value of the underlying holdings. Because DXYZ is a closed-end fund, the market price can trade at a premium or discount to its net asset value. That can create opportunity, but it can also create risk. If investors become excited about SpaceX, DXYZ could attract momentum money, retail attention, and valuation speculation. But if that excitement fades, or if the fund trades at too much of a premium, the downside can be sharp. So DXYZ may be the closest thing public market investors have to a direct SpaceX proxy, but that does not mean it is simple, cheap, or low risk. It may be the cleanest SpaceX proxy on this list, but cleanest does not mean safest. Now let's move to Tesla, ticker Tesla. Tesla is where the story becomes more psychological. Tesla and SpaceX are legally separate companies. Buying Tesla does not mean buying SpaceX. Tesla does not suddenly become a SpaceX holding vehicle just because both companies are tied to Elon Musk. Tesla is an electric vehicle, energy, autonomy, robotics, and AI-driven company. Its stock is driven mainly by Tesla fundamentals: vehicle deliveries, margins, pricing power, competition, energy growth, autonomy expectations, robotaxi timelines, and investor confidence. So why does Tesla enter the SpaceX proxy conversation at all? Because markets are emotional. They are narrative-driven. They're influenced by attention, identity, leadership, and retail psychology. And Tesla is deeply tied to Elon Musk's personal brand. If a potential SpaceX IPO becomes one of the biggest market stories of the year, some investors may treat Tesla as part of the broader Elon Musk ecosystem trade. That does not make it a pure SpaceX play. It makes it a sentiment proxy. Major SpaceX headlines could increase investor attention around Musk and bring more retail focus back to companies associated with him. That is the Tesla angle. Not direct ownership. Not SpaceX cash flow. Not Starlink exposure. Sentiment spillover. Tesla is not a SpaceX holding vehicle. It is an Elon Musk ecosystem sentiment proxy. But the risk is obvious. Tesla is still Tesla. If Tesla margins are under pressure, if EV competition intensifies, if delivery growth disappoints, if autonomy expectations get pushed out, or if the market questions Tesla's valuation, SpaceX headlines may not be enough to support the stock. This is why Tesla is powerful in terms of attention, but weaker in terms of direct SpaceX exposure. It may move on sentiment, but it should not be mistaken for ownership. Now let's talk about Alphabet, ticker Google. Alphabet is the most stable name on this list, but it may also be the least sensitive to the SpaceX IPO story. Alphabet was an early investor in SpaceX, and that connection matters from a narrative perspective. If SpaceX receives a major valuation reset, investors may start asking how that affects the value of Alphabet's stake or its historical investment in the company. That gives Google a legitimate SpaceX connection. But Alphabet is enormous. This is one of the largest companies in the world with core businesses across Google Search, YouTube, digital advertising, cloud computing, Android, AI, and enterprise technology. So even if the market assigns a much higher valuation to SpaceX, the direct financial impact on Alphabet's overall market value may be limited. That is why Google has the SpaceX connection, but not the SpaceX sensitivity. For Alphabet, SpaceX is not the main story. The main story is still advertising growth, search monetization, AI competition, cloud margins, YouTube performance, capital spending, regulation, and whether Alphabet can defend its dominance in an AI-first internet. Google could get a valuation premium narrative if SpaceX headlines become huge. Analysts may mention the stake. Retail investors may talk about the hidden value. But because Alphabet is so large, the SpaceX angle is probably not enough by itself to drive the whole stock in a major way. This makes Google the lowest beta SpaceX proxy on the list. It may be the highest quality business, but as a SpaceX IPO proxy, it is probably the weakest in terms of pure sensitivity. Now let's compare all three directly. DXYZ is the most direct SpaceX exposure proxy. If investors are looking for a public market vehicle tied to private SpaceX exposure, DXYZ may be one of the first tickers they study. But it can be volatile, structure sensitive, and vulnerable to premium and discount risk. Tesla is the strongest Elon Musk ecosystem sentiment proxy. It has retail energy, liquidity, attention, and emotional connection. But it is not a direct SpaceX asset play, and Tesla fundamentals still matter far more than SpaceX headlines. Google is the large-cap institutional holder proxy. It has a real SpaceX connection, but Alphabet is so massive that the SpaceX stake may not meaningfully drive the stock. DXYZ may have the cleanest SpaceX proxy narrative. Tesla may have the strongest retail sentiment connection. Google may have the strongest core business, but the weakest direct upside from a SpaceX valuation reset. Before the final ranking, we need to talk about risk. SpaceX may not IPO in the expected window. The valuation may be lower than market speculation. IPO disclosures may disappoint investors. Proxy stocks can rise on excitement and fall hard when the story cools off. A proxy is not the same thing as direct ownership. DXYZ can trade at a premium or discount to its underlying holdings. Tesla is driven mainly by Tesla fundamentals, not SpaceX. Google is too large for SpaceX exposure to meaningfully drive the entire stock. A watch list is not the same thing as a buy signal. Position sizing matters. Nothing in this video is financial advice. I am not your financial advisor. This is market commentary and research for education. Now here is my ranking from number 3 to number 1. At number 3, I have Google. Not because the SpaceX connection is irrelevant, but because Alphabet is simply too large for this to become the cleanest SpaceX proxy. Google has the connection, quality, and institutional credibility. But if you want a stock that could be highly sensitive to SpaceX IPO excitement, Alphabet may not be the strongest candidate. Its core business is still Google, YouTube, cloud, advertising, and AI. The SpaceX angle is interesting, but it is not the main engine. At number 2, I have Tesla. This name may get sentiment spillover from the Elon Musk ecosystem, but investors need to remember that Tesla is still driven by Tesla fundamentals. Tesla could attract attention if SpaceX becomes a major market story. It has one of the strongest retail investor bases in the market. It is liquid, visible, emotional, and deeply connected to Musk's public image. But it is not a direct SpaceX ownership vehicle. So Tesla belongs at number 2. It has powerful sentiment potential, but it is not the cleanest proxy. At number 1, I have DXYZ. Not because it is low risk, not because it is guaranteed to work, and not because investors should blindly chase it. I have DXYZ at number 1 because if investors are searching for the most direct public market SpaceX exposure, this may be the first ticker they look at. DXYZ gives the market a simple story. Retail investors cannot buy SpaceX directly, but they may be able to buy a public vehicle with SpaceX exposure. This is not direct SpaceX ownership. It is a public market proxy. So here's the big takeaway. The real story behind a potential SpaceX IPO is not just SpaceX itself. The real story may be what investors do when they cannot buy the obvious trade directly. Because if SpaceX becomes one of the biggest IPO stories in the market, retail investors may start searching for public tickers that already connect to the story. DXYZ is the direct exposure proxy. Tesla is the Elon Musk sentiment proxy. Google is the large cap holder proxy. The obvious trade may be private. The proxy trade is public. And the question is not just whether SpaceX goes public. The question is what investors buy if they cannot buy SpaceX. If you want more second-order market breakdowns like this, subscribe to Stock Breakout, hit the like button, and comment which stock you would rank number 1 as a SpaceX IPO proxy. DXYZ, Tesla, or Google.